But my forecast is Bitcoin, in essence, it's growing 60% a year for quite a while now. And I'm forecasting it will decelerate to 20% a year over 21 years. But that means on average, it grows about 29% a year, ARR. And that 29% a year for 21 years gets you to 13 million a coin. And so what do I expect to happen? Well, I expect lots of high net worth individuals that previously thought it's too risky or it's too scary. They see it legitimized by BlackRock. Now BlackRock is giving guidance that you could have 2% of your portfolio in Bitcoin.
Bitcoin is revolutionizing finance, with projected annual growth of 29% over the next 21 years, potentially reaching $13 million per coin. Its rise is fueled by institutional adoption, Bitcoin-focused ETFs, and endorsements from leaders like Michael Saylor, who now advocate including Bitcoin in portfolios. Once deemed volatile, Bitcoin is now a cornerstone of wealth creation, transforming how wealth is stored and secured. This shift marks its journey from niche investment to institutional mainstay, ushering in a new financial era. Watch Michael Saylor's interview for more insights, and don't forget to like, subscribe, and turn on notifications.
Yeah, I think I've always said it's either something or it's nothing. If it's embraced as an institutional asset, if it's legitimized as an asset, then it's not going to zero. And if it's not going to zero, it's going to 1 million. And I think the short answer to your question is education, and with education comes adoption. And at this point, you just have 95% of the world that still doesn't quite understand what it is. And that means, I mean, the way Bitcoin marches from 100,000 to 13 million, and by that's for your listeners, you're referring to my long-term forecast. I gave that forecast in Nashville in July of this year, and it's based upon the Bitcoin 24 model. So the Bitcoin 24 model is an open source macro model of Bitcoin adoption and macroeconomic development over the next 21 years. Anybody can go to Google and they can Google Bitcoin 24. They'll find it on GitHub. You can download that model. You can plug in all your own assumptions, and you can check what we thought. But my forecast is Bitcoin, in essence, it's growing 60% a year for quite a while now, and I'm forecasting it will decelerate to 20% a year over 21 years. But that means on average, it grows about 29% a year, ARR. And that 29% a year for 21 years gets you to 13 million a coin. And so what do I expect to happen? Well, I expect lots of high net worth individuals that previously thought it's too risky or it's too scary. They see it legitimized by BlackRock. Now BlackRock is giving guidance that you could have 2% of your portfolio in Bitcoin. And they're seeing the ETFs like IBIT, and they're noticing that these are the most successful ETFs in the history of the world. And BlackRock has got the most successful ETF ever launched. And now they're seeing the world's largest money manager, BlackRock, with more than $11 trillion of money managed. They're seeing them publish scholarly, thoughtful, responsible white papers on portfolio allocation. And instead of the 60-40 model with 60% equity and 40% bonds, now you've got 2% that they're saying you might want to put into a crypto asset like Bitcoin. So I think that you've got that group of people that are finding it. I also think you've got institutional investors that are moving into Bitcoin more frequently now. A lot of them are big investors in MicroStrategy. A lot of them trade MicroStrategy options. MicroStrategy's been the most successful stock in the S&P index. We're not in the S&P, but we're more successful than all 500 S&P companies for the past 4 years. I think this year too. So we're getting the attention of mainstream investors. And that's bringing a set of new investors to the asset class, because when they buy our stock, we buy Bitcoin with it. I think the third driver is a bunch of Bitcoin standard companies. A lot of companies are recapitalizing their balance sheets on Bitcoin. MicroStrategy was the first, but Mara has done it, M-A-R-A, and Riot just announced they're doing it, R-I-O-T. And the most successful company in the Japanese stock market this year is Metaplanet, and they just did it. And Similar Scientific just did it, and they tripled their stock in very short order. So you've got like a half dozen companies that are recapitalizing to the Bitcoin standard, but you've got 60 companies that have Bitcoin, and there's a lot of companies that are getting more heavily involved. I think recently HUT8 announced, HUT, H-U-T, and then Rumble, R-U-M. And so a bunch of public companies that are kind of, they're innovators, and they've got a fairly open mind, and they're flexible. And the really important thing about that, Tom, is when a public company adopts Bitcoin, they start sweeping their cash flows into it. But then after that, they may start issuing equity. And then after that, they can borrow money. So Riot just this week issued a $500 million convertible bond, and then they bought Bitcoin with it. No, Riot Bitcoin mining, R-I-O-T, Riot. And so Mara did the same thing. They did a $1 billion convertible bond deal, and they bought Bitcoin. And then they did another $850 million bond deal 2 weeks later. And MicroStrategy, when we announced we were going to pursue a Bitcoin treasury company model, we announced that October 30th of just this year. And we've raised, something in the range of $15 billion in the last 6 weeks. And so you're talking about large sums of money that are flowing. I mean, much larger sums. It took us 30 years to accumulate $500 million in order to buy Bitcoin in 2020. It took us 4 years to accumulate $10 billion. And we bought Bitcoin over the next 4 years. But then it took us like 4 weeks or 5 weeks to accumulate the next 15 billion.
Michael Saylor underscores Bitcoin's evolution from speculation to an institutional powerhouse, predicting it could reach $13 million per coin in 21 years. Backed by ETFs like BlackRock's and corporate leaders like MicroStrategy, Bitcoin is reshaping balance sheets and redefining wealth creation. With a 30% annualized return, far outpacing the 3% yield of treasury bonds, Bitcoin doubles capital every 18 months. Saylor views its volatility as a feature, driving global liquidity and innovation. Positioned as a cornerstone of modern finance, Bitcoin is revolutionizing how wealth is built and sustained. Watch the interview for more insights.
I guess if I could give the math, the risk-free rate of the dollar, if you're capitalized on US dollars and you were to say buy treasury bonds, the risk-free rate is something close to SOFR, or the standard overnight funding rate. And that ranges, but after you get paid that rate and you get taxed on it, you might get paid 5%, you get to keep 3% after tax. Maybe if you're tax-free, you get 4.5%, and if you're taxed, you get 3%. So the risk-free rate of return of your capital on that dollar standard is like in the 3% range. The risk-free rate for Bitcoin, as I just described it to you, 29% over 21 years, about 30%. So the way I look at investments is when you're pitching me an investment idea, I say, well, I've got a lot of money in Bitcoin and I'm expecting about 30% risk-free for the next 20 years. You have to actually pitch me an idea that generates more than 30% plus the risk premium plus the tax efficiency. If you told me here's a thing that'll make me 50% a year, but it was going to be taxable, that might be 40% a year or 35% a year. And I'm like, well, after the risk, it's still not as good as my risk-free rate of 30%. So if you're capitalized on Bitcoin, if you understand it, and if you understand And if you have a long time horizon, if you're going to hold it more than 4 years, you don't care about the volatility. All you care about is the annualized return. Well, the dollar is zero ARR, zero volatility. That is to say, the dollar goes up 0% against itself each year, and the dollar is zero volatility against itself each year. So if you're on the dollar, you're living in flat land. And you're a stationary person in flat land, a pedestrian in flat land. Bitcoin is going up 60% a year against the dollar. How long? Well, since MicroStrategy made its first investment 4 years ago, it's 60%. But if you stretch back 6, 8, 10 years, I think it's also 60%. So like a decade. But you can measure it back a decade and you see it's going up 60% a year. And it's 60 volatility. It's a 60 vol against the dollar. So you should think of Bitcoin as an asset. It's like you're on a speeding train going 60 miles an hour, and you've got a flywheel spinning 60 RPM. And the pedestrian on flat land is standing on the plane watching the train go by, thinking this is scary. They're thinking, my money isn't an asset because it goes up 0% a year. So they have a different view toward money than the view of someone on the Bitcoin train. The person with $1 million of cash is going to have $1 million of cash in a decade. A person with $1 million of Bitcoin is going to double their capital every 18 months if they just hold on to it, right? And so they're going to double it once, twice, 3, 4 times at that rate. So we're dealing with three concepts: risk, volatility, and performance. Okay, so I've addressed the risk issue by pointing out that there is existential risk in your given network or frame of reference. And I just want to make that point that once you understand that risk of being in that frame of reference, then you have to figure out what's the source of the volatility and the performance. And if you don't understand why the asset does what it does, if you don't understand the economic physics involved, then you'll think it's random and you'll feel like the performance is risky. So the volatility is a feature. It's not a bug. It's because it's the most useful thing in the world from a capital market point of view. And if it is that useful, then a Bloomberg jockey in Singapore is going to raise 20 billion in capital, and they're going to make it available for you to trade on Saturday night, or they're going to make $10 billion of credit available to you on Sunday morning because they're getting paid an obscene fee to do it. And once you understand the asset's appreciating because it is thermodynamically sound and it represents a lower, more efficient energy state for capital or for money. And once you understand it's volatile because the network is more useful and more leverageable, it is basically the number one source of credit or leverage in the world for everybody all the time. And once you understand it like that, you see the volatility and the performance are a feature of the engineering and the technology. They're not a happenstance. They're not accidental. They're going to continue in the same way that water will flow downhill. And, just like the normie that sees a fire and it's like, I'm going to harness the fire and I'm going to sell it. And the normie goes, well, what if the fire goes out? And the engineer goes, I'm actually going to create a machine, an internal combustion engine with 8 cylinders, and the fire's not going to go out.
Michael Saylor's vision of Bitcoin as a transformative asset aligns with Cointelegraph's report, which projects Bitcoin could cut national debt by 35% by 2049 and grow to $42.3 million per coin with a 25% annual growth rate. Representing 18% of global financial assets, Bitcoin's unmatched returns and engineered volatility position it as a cornerstone of economic transformation. Saylor highlights Bitcoin's role as a reserve asset, with strategies like repurposing seized Bitcoin and reallocating gold reserves, reinforcing its utility. As a tool for reducing debt and reshaping global finance, Bitcoin exemplifies Saylor's belief in its long-term dominance. Can Bitcoin achieve a $100 trillion valuation by 2034? Share your thoughts, like, and subscribe for more insights.